Edward Stevenson, timelesswealth.net, and the following is basic technical analysis on Zevotek Incorporated, stock symbol ZVTK. Members of timelesswealth.net requested an update to the chart posted last evening on Zevotek Incorporated following Wednesday's trading session, that is, today's trading session. A few key things. Just a reminder, what I talked about last evening, the chart looked identical to what you see in front of you on the screen. I mentioned two key supporting levels in the event that the market declined or retraced. I mentioned that 0039 was a key supporting level, which is the 200-day simple moving average, as well as 0032, which represented a technical breakout at this point in time. I also talked about the volume that came in on Monday's and Tuesday's trading session respectively, which would be these two bars right here, and how as the price appreciated, the volume grew as well. So there was a bullish correlation price volume wise. However, Wednesday's trading session, the volume was well above average, as you can see indicated by this large bar right here, and the price actually broke past two resisting levels at one point in time. However, ended below one of the slight resisting levels that I mentioned in the prior video. Now this representing the first level of resistance I talked about, 0058. This was the high coming off of Tuesday's trading session that price was not able to break or close above. However, the price opened above this resisting level and closed well above it, so this now becomes support. The theory behind this is that as resistance levels are broken, they become supporting levels. If you recall the prior video, I also mentioned there was resistance at the 008 level or so I'd say somewhere around here. I'm not going to indicate this with a trend line because, as you can see, the price did not break past this resistance level, thus it remains resistance. I also mentioned that the key mark I would be looking for, and this probably represents the greatest resistance on any sub-penny play, that would be the penny mark. And again, the reason is twofold. One, the fact that the penny mark dates back to prior resistance, which is essentially what technical analysis is based on, and two, the fact that going from sub-penny to penny is always psychological resistance, and therefore we use that penny mark to represent that. And as you can see, the price peaked at 0097, which was not too far off from 1 penny, so it was nice to see that the price was at least tackling that resistance mark. Now quickly going down to some of the technical indicators, here's one thing I mentioned from yesterday. I left the chart looking something like this, and I mentioned that, if full stochastics can break into the oversold mark, which is essentially above 80, we're going to see some momentum. And indeed, momentum came in, strong volume came in, and momentum volume came in, more importantly. And if you take a look down here at the money flow, the money was flowing in, all these indicators just shot up, especially the RSI. And here I have all three periods essentially overbought, which means that there's a chance that the market can decline, and that's why it's important to understand what potential levels of support are and where you might want to add to a position in the event that you are a Zevotek long or you're a swing trader and you're looking for re-entry after perhaps entering in the morning and then selling somewhere around here. Now this candle right here shows us that although we tested a few resistance levels and we broke past one that I talked about, and at one point in time we broke past that 008 one I talked about, and we almost tested the 1 penny mark, there was some uncertainty or bearish activity that occurred once we hit that high. And I can tell that because I know that we peaked at this price, however we only closed at 0072. So let's take a look at the 60-minute chart and see what happened. Here we are with the 60-minute chart, which means every bar and or candle in this chart represents 60 minutes worth of price action. As you can see, on Wednesday's trading session we opened up right here at 0059, and on strong volume you can see the volume was increasing. This represents Wednesday's trading session just here, where it's indicated in 23 and obviously ending off at 24. The volume grew, as did the price, and towards the end, let's say the last hour and a half, you can see these three red candles, we pulled back and therefore ended at 0072. You can see the volume grew here as well. So although we started off bullish, we ended off slightly bearish, which could indicate a potentially lower open to the trading session on Thursday. However, it was only natural that the market declined after such a rally in price. Now the reason I bring this up is not to discourage anyone, not to make anyone feel bad who might have bought at a higher price, but I'm just trying to show you why it is that that candle on the daily chart appeared as it was. And the reason for that was that towards the end of the trading session there was an evident pullback and some profit taking. Also, please disregard this high at 0.67. This is what's commonly known as a fat finger trade, a fat trade. And in essence, it doesn't really mean anything relative to this chart. So if you are a Zevotek long, a Zevotek swing trader, what you'd like to see here is continued liquidity and volume coming in. This volume that came in these few past trading sessions has been great, and if this can continue, then more likely than not we'll see swings along the lines of what we saw here in the past few trading sessions, and a lot of opportunity for making profits. So remember, this was Edward Stevenson, timelesswealth.net. If you have any questions, feel free to email me, and when you have a moment, check out my site. Again, that's timelesswealth.net, and subscribe to my free newsletter for overlooked trading and undervalued investment ideas. Thank you for listening.